On a question that one of my colleagues had that not sure I heard a precise answer to. I think the question was a variant of what is the level of desirable or necessary leverage within the banking system on a macroeconomic level to hopefully ensure we don't repeat what we have just been through. Clearly, there are those within Congress who believe in artificial limits to the size of financial institutions, who believe in federal regulators should have power to prohibit certain credit offerings. Some of us believe that hopefully out there is a proper application of risk-based application of capital and liquidity standards that would hopefully perhaps lead to a more prudent leveraging within our economy. But the question is, from your perspective on a macroeconomic level, what is the amount of leverage the system can handle a cyclical downturn?
It's not an easy question to answer.
That's why I ask you.
So it's not a single number because, as you mentioned in your question, first of all, it's risk-weighted, depends on the mix of assets. As you know, we currently have the 8% requirement under Basel II. I think we want to, first of all, increase the risk weights so that there's more protection against risky assets, number one. Number two, we want to make sure the capital is of higher quality, that is more common equity and less, subordinated debt instruments, for example. And
Mr. Chairman, if I could, I understand that, but does the question defy an answer? Is it possible to quantify on a macroeconomic basis?
I'm sorry, it is certainly possible, but we're currently engaged in a very elaborate process with the Basel Committee and other colleagues around the world to try and determine that number. We don't have a single number yet that we can give you.
And Mr. Chairman, when might we expect that number from on high?
The objective is to have it by the end of this year.
Thank you. Mr. Chairman, in answer to several questions, clearly you believe, as do many others, that the nation is on an unsustainable fiscal path, and I think you have described quite eloquently, as have other prominent economists, the dire consequences associated with that. I don't think I quite have the lyrics right, but I'm reminded of a country and western song that says something along the lines, everybody wants to go to heaven, they just don't want to go now. So we have so many people who claim they want to do something about this problem, but I've, with one exception offered by Congressman Ryan of Wisconsin, I haven't seen any plans put on the table. Taking default off the table, because it is totally unacceptable, assuming for the moment we do not achieve any level of spending discipline we haven't been able to achieve in previous decades, I'm under the impression we cannot grow our way out. I don't have the number at my fingertips. I think I've seen at least some studies suggesting we'd have to have double-digit economic growth for the next 3 decades to grow our way out. Can we grow our way out of this
I don't
problem?
think so, not in the medium term.
Okay, if we can't grow our way out, you have said repeatedly you do not intend to monetize the debt, although there are a number of people within our economy who think you're already doing that. We'll leave that subject to a different time and place. That unfortunately leaves, under my hypothetical, tax increases. I have seen studies that show that if we only tried to solve this problem on the tax side, that, number one, just over the next 10 years of the president's budget window, we would have to increase taxes, income taxes, roughly 60%. Have you seen similar studies? Have the Fed, have you researched this?
That sounds like the right order of magnitude.
Okay, and my children who are young, according to a CBO analysis, we would see tax brackets go, 10 would have to go to the 25% bracket, 25 to 63, 35% bracket to 88. It's fairly dire. So have you modeled what would happen to the economy if we indeed had tax increases of this magnitude?
Well, I don't know the exact numbers, as I said, and obviously forecasting is difficult, so I don't want to put too much weight on any single number, but I think you and I would agree, I think most people would agree that a big increase in marginal tax rates is going to be counterproductive from a growth perspective.
I hope I can slip this in the seconds I have left. Recently, Alan Meltzer wrote an op-ed in the Wall Street Journal, my guess is you're familiar with it, that asked the question, how much might one have to pay on the interest on the bank reserves? I'm not sure I haven't seen you answer that question publicly. I'd want to give you that opportunity.
We
Well,
think,
we're into the deficit now, so if you can give a brief answer, otherwise it'll have to be in writing.
we think that the interest rate we pay on reserves will bring along with it the federal funds rate, but within, tens of basis points, not a tremendous difference.
Thank you, Mr. Chairman.
You can elaborate in writing. The gentleman from